Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the euro-dollar pair with Paulo Greco. The EURUSD currency pair traded much more calmly on Thursday than during the first half of the week, and the market was also relatively more technical. Since the beginning of the week, we've been repeating the same message. Market movements have been unusually erratic and chaotic, and the market is simply ignoring any macroeconomic backdrop. While the second point remained unchanged on Thursday, the first was temporarily neutralized. It is hard to determine how long that will last. After strong growth on Monday and a sharp decline on Tuesday, triggered by the firing and subsequent rate statement of Jerome Powell as Federal Reserve Chair, the price returned to the sideways channel it had been trading in all last week. Therefore, in the absence of new information from Trump, the price may continue to move sideways. Among Thursday's trading signals, we can highlight the bounce of the 1.1391 level, after which the price moved down a couple of dozen pips. While the move was small, such signals and profits are preferable to market storms and complete disregard for technical analysis. The latest COT report is dated April 15. The chart above clearly shows that the net position of non-commercial traders had long remained bullish. Bears barely managed to gain the upper hand but quickly lost it again. The bears' advantage has visibly diminished since Trump took office, and the dollar sharply declined. We cannot definitely say that the decline of the US currency will continue, but COT reports reflect the sentiment of large players, which can change rapidly under the current circumstances. We still see no fundamental factors justifying euro strength, but one significant factor is now driving dollar weakness. The pair may continue to correct for several more weeks or months, but a 16-year downtrend won't reverse so easily. The red and blue lines have now crossed again, signaling a bullish trend in the market. During the latest report week, the non-commercial group increased its long positions by 6,800 and reduced its short positions by 2,500, resulting in a net increase of 9,300 contracts. The EURUSD pair maintained its upward trend on the hourly timeframe, though there is no clear trend line or channel. On the daily chart, we can say officially that the downtrend has been cancelled, something that would never have happened if Trump hadn't started a trade war. Thus, the fundamental backdrop has broken the technical picture. Something rare, but not impossible. There is currently very little logic or technical structure in the pair's movement across all time frames, and macroeconomic data does not impact the pair's dynamics. Trading levels for April 25: 1.1321, 1.1391, and 1.1457 and 1474. On Friday, no significant events or reports are scheduled in the Eurozone. In the US, the University of Michigan Consumer Sentiment Index will be released. We've seen much more important reports recently that were utterly ignored. However, the market is still in chaos and disorder, and the EURUSD pair may continue to trade sideways until new tariffs or Trump firings occur. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD over the last 5 trading days is 97 pips, which is considered as middle for this currency pair. Therefore, on Friday, April 25, we expect movement within the range of 1.3199 and 1.3393. The long-term regression channel is pointing upward, indicating a clear uptrend. The CCI technical indicator has again entered overbought territory. But in a strong bullish trend, this generally signals only short-term correction. The GBP pair continues its steady uptrend. We still believe that this upward movement is a correction on the daily timeframe, which has taken on an illogical character. However, if you are trading based purely on technicals or reacting to Trump's action, long positions remain valid with targets at 1.3393 and 34.28. As the price is above the moving average line, it's a sign line on a graphic. Short orders remain attractive, but the market isn't even considering buying the US dollar right now, especially as Donald Trump regularly triggers fresh sell-offs. That's all for today. Wish you best of luck.